Today, we're going to be talking about modified endowment contracts. I hope you enjoy. So, in keeping with our theme, is we're in Life Insurance Awareness Month. Today, we're going to be talking about the three main benefits of a modified endowment contract. Now, you may not know what that is, but when we look at life insurance policies have some unique tax treatment. They get some tax advantages. However, if you violate those tax advantages, you create what the government calls a modified endowment contract. The term that we use in the industry is a MEC. And most agents don't really understand those contracts because when they're brought into the business and they're taught about life insurance, they're taught right up front, you never want to MEC a policy. The term they'll use, they'll say, if you MEC it, you wreck it. Well, while that does change the tax implications of a life insurance contract, there are a number of scenarios where a modified endowment contract can be extremely effective and extremely attractive. Primarily, where people are going to find value in it are going to be situations. For the most part, you're usually going to be 60 years old or older, and that's because, again, part of the tax rules that deal with if you're 59 and a half or younger. But the primary benefits that you get when you take money that would maybe otherwise just be sitting dormant, and it's not like emergency money, it's not money that you need, it's just money that you don't want at risk. Well, you can position that money in a modified endowment contract, and then all of a sudden, what you end up doing is you've now created an account that now is going to give you tax-deferred growth. If the contract is designed properly and you're dealing with somebody that knows how to structure it, and you got the right carrier, it can have instant liquidity. So you still have the same access to the capital that you had when it was sitting in a bank account. And the other thing that you can bring to bear is you can actually get some long-term care or critical illness benefits out of it. So let's say, just for a quick example, let's say a person had $100,000 sitting in a CD and they required long-term care. And they used $80,000 of that to pay for their long-term care. Well, then there's $20,000 left to go to their survivors. If that $100,000 is not earmarked for anything, they could position it in one of these contracts, and depending on their age, maybe they get $190,000 to $220,000 contract, which simply means that modified endowment contract, if they were to pass away, will now pay between $190,000, let's just say $190,000 and $200,000 death benefit, income tax free. So it becomes very tax efficient. But same scenario, let's say that they, in the last few months of their life, they require care, and they end up having to spend $80,000 of their money paying for care. Well, if they had never dealt with MEC, again, $20,000 is left to go to the family. If they utilized the modified endowment contract strategy and they had the proper riders on the contract, they've now got $190,000 total face amount of coverage. They spend $80,000 for long-term care. Well, that $80,000 gets drawn against the death benefit. So when they pass away, there's still $110,000 that goes to the family. And the only thing they did was shifted the asset from one pocket to another pocket. Still had full liquidity if they needed access to the capital. Now they got tax-deferred growth, which now makes them more efficient, keeps them from potentially paying tax on their Social Security and other things. And now it also brings to life some potential chronic illness or long-term care benefits that they didn't have otherwise. So this can be an extremely powerful and valuable planning tool for an individual when they do have that kind of inactive dead money that's just sitting around that they again don't want to put at risk, but they would like to get something out of. So if you have questions about this or any other insurance related questions, don't hesitate to give Terry or myself a call here at Westside Advisors and Insurance Services. I hope you have a great week.